I'm 680 News Senior Business Editor Mike Eppel. Tough go of things for the tech stocks to start the week on Wall Street. Quite the free fall for the big names, Apple and Facebook and others. Apple was the lead decliner in the Dow Jones Industrials average today, falling more than 2% on reports in the Wall Street Journal that Apple has quietly been scaling back its production orders for its newest iPhones. Now, this is something that a lot of analysts had worried about when Apple last month said that it would not be issuing unit sales on a quarterly basis for iPhones going forward. And that was taken as some as a red flag that the company might be seeing perhaps peak iPhone and a slowdown in its profit generation machine. Since reaching an all-time record high of $233 per share U.S. in the first week of October, the stock today of Apple was down to $187. It's wiped out about $200 billion in market cap after reaching records earlier this fall. Facebook, meantime, continued its decline, down another 4% today, falling to its lowest level since February of 2017. This is on concerns about internal management, how they've dealt with data breaches this year, the spreading of false information, what they're doing to clean that up, and perhaps some infighting amongst executives within Facebook. Analysts also worried that social media might be facing more government regulation in 2019. That was something that Apple CEO Tim Cook actually talked about in a weekend interview with Axios, saying that it might be time for the government to try to take some steps to crack down on some of these social media platforms. Bombardier today bounced back from its worst week on Bay Street in 30 years. Last week, the share price tumbled 37% to a multi-year low, as Bombardier is facing scrutiny about a stock sale plan for its executives, which is under review by the Quebec securities regulator, and its recent changes in strategy where it's selling assets to pay down debt, and some question about its growth prospects going into 2019. Now today, the stock was back up by about 13% as Citigroup said that the Quebec security regulator's review of the executive compensation plan is just a normal course of business. Biggest bridal boutique retailer in the United States, with operations here in Canada, David's Bridal, today filed for Chapter 11 bankruptcy. Now, this company has about 300 locations in the States, 12 here in Canada, says it will be a normal course of business because it has financing from some big lenders in the United States, so it is not thinking about closing many stores, if at all, in its bankruptcy review. It's been around for more than 60 years, but much like other names in the retail sector, has faced some challenges and is looking now to reorganize. And those cryptocurrencies. A year ago, you just could not get enough of Bitcoin and others as they hit the stratosphere. In fact, a year ago this month, Bitcoin was up to around $19,500 US, and it looked like the sky was the limit. Well, apparently it hit its peak because pretty much ever since the start of the year, Bitcoin and others have been dropping. Today, the cryptocurrency hit a 13-month low at barely above $5,000 US. From the 680 Newsroom, I'm Mike Eppel for City News.